Hey guys, Killstokes here. Welcome back to the channel. In today's video, I'm going to break down a trading opportunity I took this morning in the Forex market. And here's the cool part. This setup blends both trend continuation and counter trend trading concepts into one clean trading idea. I'm also going to show you three powerful ways to use the RSI indicator, including looking for regular diversions, hidden diversions, and some other cool stuff that you'll see once we get started. We also take a look at double bottoms, Fibonacci, psychological numbers. There's a lot to unpack in this video, but hopefully I'm going to simplify it that way you can use it in your own analysis. Now, if you're confused by anything in the video, don't worry. Coming in about 2 weeks, end of November, we have a 3-day online trading event that we're going to host, and we're going to teach you all of this stuff. But you got to sign up, you got to register. Seats are filling up soon. Do not procrastinate, because once the seats are gone, we're locking down the registration. There's a link in the description box below, or just head to www.tier1trading.com to check it out. Let's hop into the video. Okay. So, all right, got an interesting situation here. So we got a bullish continuation trade here on Canada, where we've retraced, and Leo, this may be right up your alley. We've retraced and we've come down to a previous level of structure, right? We've put in double bottom, right? You guys see it? Yeah, at market. I'm technically like 8 minutes late, but I entered it. I don't even know if that's breaking my rules. I'm not a candle late, so I'm gonna count it's 8 minutes. Does that count? I actually don't know how to classify that, to be honest with you. I should have gotten involved at 9 at the end of this candle. It's 8 or 10 minutes past. And actually, I don't have a rule for what's too late. I know if another candle had formed and it came back down and it's too late. But I actually don't have a time-based rule, which is, I don't know if I think it's okay too. I don't know if we need a time-based rule, because it's 5 minutes. Is it 1 minute? Like, what would be? Yeah. So I'm going to say it's okay. I am actually lost here. I don't have a rule for this, nor do I know if there should be a rule for it aside from, but I guess there should be something. But yeah, this is interesting. I'm going to say I'm okay though, because I want to be in this trade. So let's just keep that between me and you. Okay, guys. Let's not tell anyone. We're coming down to a previous level of structure, right? And we have a nice double bottom, beautiful textbook double bottom here. Anything else to add to this double bottom, CTS traders? RSI is oversold. What else? We got three things. One thing you may not notice, because I don't talk about it a lot. I used to use it as a day trader. Divergence. Yep, we got some divergence. Oh, yeah, there we go. We got hidden divergence also. All right, we take a look at our previous low, outside return. Our current, what we hope is going to be a potential outside return. And you can see that something is different here, right? Now, this is a brain musher. All right. This is where things can get confusing. This is why I don't like talking about hidden divergence, right? But this is an example of where you can use hidden divergence and regular divergence in the same lesson, right? So bigger picture, this is the hidden divergence, looking at point A right here to point B. We clearly have higher lows and we have lower lows on our RSI, right? You guys see that? Hidden divergence. This is typically seen as a positive for trend continuation traders. Now, here's the interesting thing. I'm going to try to say this slowly so I don't like insert a worm into your brain and eat you from the inside out. When we look micro at just this small double bottom, and we look at this section right here, this is going to be our regular bullish divergence. Does that make sense? Okay. Now, the interesting thing here is like, okay, well, you would, Akil, you in general terms, you think of bullish divergence as being for counter trend and hidden divergence as being for trend continuation, if we had to classify the two, right? If you're a pullback trader, you are essentially using a counter trend trading technique because you're trading a reversal. You're banking on the market falling, stopping, and reversing, which is a counter trend because the market is going short and you're looking to get long, you're using a counter trend trading technique to enter a trend continuation trade. Does that make sense? And again, I don't want to burst your brain open too much, but I just want to make that clear for those who are like, well, I thought divergence was used in counter trend, or double tops and double bottoms used in counter trend, right? So it's a pullback trade is a counter trend trading technique to get into a bigger trend continuation trade in this specific case. So we got price action coming down to a structure level. We got some Fibonacci love there too. I didn't draw it on, but Fibonacci retracement, swing low to swing high, right? You can see right that 50% Fibonacci retracement. We've got bullish divergence here on the double bottom. We've got hidden divergence here. We've got this too. I don't talk about this often. I used this when I was a day trader. I'm not good with words, but I called this an RSI swap. And pretty much what it means is when looking at the swing, hey, take care, Ollie. When looking at the swing, I'm looking for a move that directly goes from oversold, or overbought in this case, to oversold. You guys see that? So I like swings that go directly from overbought to oversold. It's one clear aggressive move. That was something I used in day trading a lot. Usually with a quicker RSI, but same thing. So yeah, decent trade here. So let's talk about this. Let's build the rest of this thing out. Obviously, I'm already involved in it, so I don't want to look at this. So I kind of want to get this done quickly because I believe in the jinx. But entry right at market, right here. What are some ways we can do stops? You guys know how I do stops, but what are some ways we can do stops? You're probably going to say the same thing that I do. ATR-based stop. So we go to our most recent candle, which was this red one, the ATR, right? You can see it in the bottom right-hand side of your screen. That's going to be 0021, which means 21. So you want to find the low of your pattern, which is the double bottom, not this candle. The low of the pattern, which is the double bottom. That's going to be 14000, right? The even handle number, psychological number, right? Another clue that you guys missed out on, right? We're going to subtract 22 from that, which is going to put us at 78, right? So stop loss is going to be at 139.78, right here. Now, here's the one where it's going to differ depending on you as a trader. Targets. Where are your targets? So I'll tell you what I like for a first target. And again, this is conservative Akil. I like this level right here. Right? So we have our double top. This is the peak or the valley of our double top. We also have this psychological number of 141 even. I didn't even get this into the pro trade log. Sorry about that. 141 even. So I want to be right below that and get target ones out there. Now, target twos, again, going back to the daily candle, right? I like the same level. Right? We spoke about this being the zone earlier, or by earlier, I mean last week, right? This being the zone last week that we'd expect price action to come to anywhere in this zone. And then what we want to do is we want to break down this zone, right? So let's add a few things, right? Same as we did with the NASDAQ earlier in the day. Let's take Fibonacci extension from swing low to swing high. Right here. You can see we have a 127 right at 142 or 142.07. So we know we don't want to be at 142.07. Let's get below 142. Again, that's the level that we had on our radar previously. We can now potentially add, it's still a little bit early, but we can potentially add this AB equals CD pattern, the equal measure move to it as well. This is what we couldn't add last week. And you'll see that's going to put us a little bit higher at about 142.5, right? So the options that I would say, and I went 142 even, or below 142 even, excuse me, are between 142 even or right below it, obviously, and then 142.5. I think that's your best bet for secondary targets. Hope you guys enjoyed the vid. Got a lot of new subscribers lately. Thank you for joining. Also, a lot of new questions about trading computers. So as always, I'm going to forward you to a person that is much more knowledgeable than me. Find the link in the description box below or scan the QR code. It will take you to a free Computer Builder's or Buyer's Guide. Pretty much it's a guide that breaks down all of the different components that are needed to be in a trading computer and which ones are important to you or non-important to you depending on what you're looking to build. There's also a discount if you want them to build one for you. If I've had it done twice in my career, happy both times, but more importantly, use the knowledge, that way you can have it with you for when it's time for you to upgrade your system. All right, until next time, plan your trade, trade your plan. Take care.